Welcome back, everyone. Today we're taking a deep dive into something pretty interesting. Xiaomi's 2023 annual report. They've got, well, a unique approach to business, you could say that,
Yeah.
especially their commitment to sharing profits with users. Get this, they're aiming for a hardware net profit margin of less than 3% in 2023. Yeah, so that means more value going back to you as a customer. Pretty cool, huh? We'll also be exploring their impressive growth in the premium smartphone market and even their foray into electric vehicles and smart manufacturing.
Yeah, it's really fascinating. It's a case study almost. A company blending innovation with a commitment to its users and the planet all at once.
Okay, so let's get into it. Let's dive into the first segment. Xiaomi's diverse business landscape. The report highlights two core areas, smartphones and IoT and lifestyle products. It's that second one that really caught my eye. They've got a staggering 739.7 million connected devices on their AIoT platform. That's a 25.5% jump from the previous year. Imagine the possibilities of that interconnected world.
What's really fascinating to me is how these segments aren't just standalone businesses, you know? They all work together. It's part of their human X car X home strategy.
Okay, interesting.
Xiaomi is weaving smartphones, smart homes, and even electric vehicles into a single ecosystem.
So you're saying I could be driving home in my Xiaomi EV, and it's already adjusting my home's temperature based on my preferences.
Exactly. They're working towards that seamless experience. And what underpins all this is Xiaomi HyperOS, their own operating system. Think about it, proactive services that anticipate your needs based on your habits. Your phone could suggest routes based on your calendar. Your smart speaker could start your favorite playlist as you walk in the door. The possibilities are pretty mind-blowing.
Okay, yeah, that's a future I can get behind for sure. But before we get too swept away by the tech, let's ground ourselves in the numbers. Time to dive into the financial highlights of Xiaomi's year. One thing that really stood out to me was their impressive average selling price, or ASP, increase in mainland China, over 19% year over year. That tells me they're successfully tapping into that premium market.
You're spot on, but there's a strategic nuance here. While mainland China saw that surge, Xiaomi strategically cleared inventory in overseas markets, which led to a lower overall ASP for their smartphones. So it's a balancing act between global expansion and maintaining profitability.
So we've got these contrasting trends in ASP, higher in mainland China, lower overseas. How did that impact their overall revenue and profit?
If we connect this to the bigger picture, the contrasting ASP trends directly impacted their revenue and profit figures. Despite a slight decrease in overall revenue, Xiaomi still saw growth in specific areas, especially within mainland China. And it's interesting, the number of users with 5 or more connected devices jumped to 14.5 million. That's a huge leap.
Hold on, a huge leap. Okay, you've got my attention. What does that mean in terms of their financial strength?
That surge in users with multiple connected devices is a gold mine, basically. It signifies deeper engagement within the Xiaomi ecosystem, leading to more recurring revenue streams from services and subscriptions. It's a smart strategy for building long-term financial stability.
Okay, so let's talk about what everyone wants to know. Shareholder value. Xiaomi has pledged to keep its hardware net profit margin below 5% and return any excess to its users. That's pretty unheard of, isn't it? What does that actually mean for someone like me, someone who might be interested in investing in Xiaomi?
It's definitely a bold move. It really raises an important question about how companies can share value with their customers. Xiaomi is really putting their money where their mouth is, so to speak. Their hardware net profit margin was actually less than 3% in 2023. And beyond that, they're actively engaging in share buybacks to further return value to shareholders. In 2023 alone, they repurchased a significant number of shares, demonstrating their commitment to both users and investors.
Less than 3%. Wow. They really are serious about this profit-sharing model.
Hmm.
Can you give me some hard numbers on those share buybacks in 2023?
In 2023, Xiaomi repurchased a whopping In 2023, Xiaomi repurchased a whopping 4.2 billion Hong Kong dollars worth of shares. That's a clear signal they're serious about returning value to shareholders.
Wow, 4.2 billion. That's not pocket change. Okay, so we've seen how Xiaomi is performing financially. Now let's explore how they're planning for a sustainable future. Their sustainability goals really caught my eye: carbon neutrality by 2040 and 100% renewable energy. Those are ambitious targets. Do you think they can actually pull it off?
Well, what's important to note is how Xiaomi is linking financial success with sustainability. They're not treating these goals as separate initiatives, but as interwoven aspects of their overall strategy. Take the Xiaomi Smart Factory, for example. This facility boasts an annual capacity of 10 million units, and it's really a testament to their commitment to automation and intelligent manufacturing.
So they're minimizing waste and optimizing resource use. Makes sense for the planet and the bottom line.
Exactly. And it doesn't stop there. They're investing heavily in renewable energy and energy-efficient technologies across their operations. Their 3-in-1 fast charging infrastructure is a prime example. It combines wired fast charging, wireless fast charging, and reverse wireless charging. Talk about convenient.
Yeah, that sounds incredibly useful. As a user, I'd love to have that kind of charging flexibility.
Yeah.
But are they doing anything beyond the tech itself to make their products more sustainable?
Absolutely. They're even exploring bio-based materials for their products. The Xiaomi 13T smartphone's back case, for instance, is partially made from apple pomace. Who knew apple peels could be so high-tech?
That's amazing. Okay, so we've talked about their business segments, their sustainability initiatives, and their commitment to shareholder value.
Yeah.
But to really understand their financial health, we need to take a closer look at those all-important financial statements. Let's start with the income statement. What kind of insights can we glean from that?
The income statement gives us a snapshot of Xiaomi's financial performance over a specific period. It reveals their revenue streams, the costs associated with generating that revenue, and ultimately their profitability.
All right, bring it down for me. Where does their revenue primarily come from?
Their revenue is categorized into three primary streams: smartphones, IoT and lifestyle products, and internet services. Each of these segments contributes to their overall financial picture, but smartphones have historically been their largest revenue generator. However, their IoT and lifestyle product segment is rapidly gaining traction.
Yeah, that aligns with their vision of an interconnected ecosystem. It's not just about phones anymore. But generating revenue is only one part of the equation. What about the costs involved? What can you tell me about their cost of goods sold?
A significant portion of their cost of goods sold is attributed to procuring raw materials and components for their devices. They also have assembly costs as they work with various outsourcing partners for production.
Makes sense. Got to factor in all those expenses. So we've covered revenue and the cost of goods sold. What about those other costs associated with running a business? What can you tell me about their operating expenses?
Operating expenses cover everything from research and development and marketing to administrative and sales expenses. Essentially, it's everything that's not directly tied to manufacturing the products.
Got it. So by analyzing these metrics on the income statement, we can get a better sense of how efficiently Xiaomi is generating profits. But the income statement is just one piece of the puzzle. What about the balance sheet? What insights does that offer?
The balance sheet is like a financial health checkup. It provides a snapshot of Xiaomi's assets, liabilities, and shareholder equity at a specific point in time. It shows what they own, what they owe, and the value belonging to their shareholders.
Okay, walk me through some of the key things to look for on their balance sheet.
On the asset side, you've got cash and cash equivalents, which represent their readily available funds. Then there are accounts receivable, which are the amounts owed to them by customers who have purchased goods or services on credit. And of course, you can't forget about those big ticket items like property, plant, and equipment. Those represent Xiaomi's investments in physical infrastructure like manufacturing facilities and offices.
Right, those are their long-term assets. But what about the flip side? Their liabilities. What are some of the key things to watch out for there?
Liabilities represent Xiaomi's financial obligations. Accounts payable, for instance, are the amounts they owe to their suppliers. Accrued expenses are those that have been incurred but not yet paid, like salaries or rent. And then there's debt, which is a significant liability for most companies. Xiaomi's balance sheet will detail their outstanding borrowings.
So by comparing their assets and liabilities, we can get a sense of their overall financial strength. But there's one more piece of the balance sheet we need to address: shareholder equity. What role does that play in understanding their financial health?
Shareholder equity represents the residual value of the company's assets after all its liabilities are paid off. It's essentially the portion of the company that belongs to its shareholders, a measure of the value they hold.
Okay, so we've got the income statement and the balance sheet. What about the final piece of the financial statement trio, the cash flow statement? Why is that so important?
The cash flow statement tracks the movement of cash both into and out of Xiaomi over a specific period. It's divided into three key sections: operating activities, investing activities, and financing activities.
All right, break down those sections for me. What falls under operating activities?
Operating activities represent the cash flows from Xiaomi's core business operations. This includes cash generated from sales, as well as cash used to pay suppliers, employees, and other operating expenses. It essentially shows whether their core business is actually generating cash.
Got it. So a healthy cash flow from operations is a good sign. What about investing activities?
Investing activities track Xiaomi's investments in long-term assets, such as property, plant, and equipment. This section also includes cash flows from the purchase and sale of investments.
So it shows how they're allocating capital for future growth. Makes sense. What about that last category, financing activities?
Financing activities cover cash flows related to raising capital and repaying debt. It includes things like issuing stock, taking on loans, and paying dividends.
So it's all about how they're managing their financial structure. All right, we've covered the three main sections of the cash flow statement. Now, I've heard a lot of buzz about free cash flow. Can you explain what that is and why it's so important to investors?
Free cash flow is a key metric that represents the cash a company has left over after covering its essential capital expenditures. It's essentially the cash that's available to be distributed to investors, used to reduce debt, or reinvested in the business.
So it's a measure of financial flexibility. And investors love to see strong free cash flow, right?
Absolutely. A strong and growing free cash flow is generally a positive sign because it indicates that the company has the resources to create shareholder value.
Okay, that makes sense. Now, let's talk about debt. You mentioned that it's a major liability for most companies and can be a valuable tool for financing growth, but it also comes with risks. So how much debt does Xiaomi have, and how are they managing it?
Their annual report provides details on their outstanding borrowings, including the principal amounts, interest rates, and maturity dates. To assess their debt burden, we can look at key metrics like the debt-to-equity ratio.
Remind me again, what does the debt-to-equity ratio tell us?
The debt-to-equity ratio compares Xiaomi's total debt to its shareholder equity. A high debt-to-equity ratio could indicate that they're relying too heavily on debt financing, which can be risky.
And what about their ability to actually service that debt to make those interest payments?
That's where the interest coverage ratio comes in. This metric measures Xiaomi's ability to generate enough operating income to cover its interest expenses. A low interest coverage ratio could signal financial strain.
Okay, so those are two important red flags to watch out for when assessing their debt situation. But even if those metrics look good, there are always potential risks for a company like Xiaomi. What are some of the key challenges they face moving forward?
One key risk is intensifying competition. The tech industry is constantly evolving, and Xiaomi faces pressure from both established players and new entrants.
That's true across all their business segments, smartphones, IoT, even EVs. What else should investors be aware of?
Global economic conditions are another factor to consider. Economic slowdowns or recessions could dampen demand for their products.
And we can't forget about supply chain disruptions. Those seem to be a recurring theme these days.
Absolutely. The global supply chain is complex and vulnerable, and disruptions can significantly impact production and profitability.
So there are definitely some challenges on the horizon. But before we wrap up our deep dive, I want to circle back to their overall business strategy. What are the key pillars that guide their decision-making?
Xiaomi's strategy is centered around three core principles: innovation, affordability, and a user-centric approach. They're constantly pushing the boundaries of technology, striving to deliver cutting-edge features and functionality in their products, all while remaining committed to offering value-for-money products.
And their dedication to their users seems to be a real differentiator, especially with that unique profit-sharing model we discussed earlier.
It is. They place a strong emphasis on building a community around their brand, engaging with users, and incorporating their feedback into product development.
Okay, so we've covered a lot of ground today. We've explored Xiaomi's business segments, dug into their financial performance, and assessed their overall strategy. But before we move on to final thoughts, I want to touch on one more thing: their commitment to sustainability. They've set some ambitious targets for carbon neutrality and renewable energy. Are those just lofty goals, or are they taking concrete steps to achieve them?
They're definitely walking the walk. We've already talked about the Xiaomi Smart Factory and their investments in renewable energy. They're also exploring the use of bio-based materials in their products, like the Xiaomi 13T smartphone's back case, made partially from apple pomace.
So they're making progress on multiple fronts. It sounds like they genuinely understand the importance of environmental stewardship and are taking concrete steps to reduce their footprint. All right, I think we've covered everything we set out to do today. We've taken a comprehensive look at Xiaomi's business, their financials, and their vision for the future. But I want to leave our listeners with a final thought-provoking question. Imagine a future where your smartphone anticipates your needs, your home runs on 100% clean energy, and your car seamlessly integrates with your digital life. Could Xiaomi be the company that makes this a reality?
That's a question only time will tell. However, based on what we've seen in their annual report, I wouldn't bet against them.
They've demonstrated a remarkable ability to adapt, innovate, and execute. And they seem genuinely committed to making a positive impact on the world.
They've got a solid financial foundation, a compelling vision for the future, and a passionate team dedicated to delivering on their promises. Yeah, they've got a solid financial foundation, a compelling vision for the future, and a passionate team dedicated to delivering on their promises.
It's fascinating how Xiaomi manages to balance those ambitions with a real commitment to sustainability. They're not just chasing the next shiny gadget. They're thinking about the bigger picture.
Yeah, it makes their story all the more compelling. They're essentially saying, we want to build the future, but we want to build it responsibly. It's refreshing to see that kind of forward-thinking approach.
So let's step back for a moment and recap the key takeaways from our deep dive into Xiaomi's 2023 journey. We started by exploring how they're pushing beyond smartphones to create this incredible ecosystem of connected devices.
From smart home appliances and wearables to electric vehicles. It's an ambitious vision of an interconnected world. And they're laying the groundwork with their own operating system, Xiaomi HyperOS. It has the potential to revolutionize how we interact with technology.
And when we looked at their financials, we saw a company that's not just growing, but managing its resources responsibly. They're keeping their debt in check, generating healthy cash flow, and actively returning value to shareholders through those impressive share buybacks.
And not to mention their commitment to sharing profits with users, pledging to keep their hardware net profit margin below 5% and return any excess to users. It's a bold move that sets them apart. It shows they're prioritizing long-term trust with their customers over short-term gains.
It's a unique approach that could really pay off as they navigate the increasingly competitive tech landscape. So we've got a company that's pushing boundaries, expanding into new markets, and prioritizing both its users and the planet. It leaves me wondering, what's next for Xiaomi? What can we expect to see from them in the coming years?
Well, that's the exciting part. They're a company that's constantly evolving, always pushing the envelope. Based on their track record, I'd say I anticipate even more innovation, strategic expansion, and a continued commitment to sustainability.
Well, we've only scratched the surface of Xiaomi's story today, but I think we've given our listeners a good understanding of their journey so far. They're a company to watch, a force to be reckoned with in the global tech landscape.
It's been a pleasure unpacking this fascinating story of innovation and ambition with you. I always enjoy exploring companies that are shaping the future.
And as always, we encourage our listeners to continue exploring too. There's a whole world of fascinating stories out there waiting to be discovered. Until next time, keep those thinking caps on.